Right now, we're unpacking some of the tax implications of the budget speech that was delivered by Finance Minister Pravin Gordhan last month rather. We're already into March. South Africans, of course, can look forward to tax relief at 7 billion rand. And joining us with their perspective on the issues are Eugene du Plessis, who's a tax director at PKF, and Russell Lamberti, chief strategist at ETM Analytics as well. Welcome to you both. Thanks so much for joining me this morning. Russell, let's perhaps start off with you and get your overall impressions of Budget 2013 that was delivered last month, because many saying, where everyone seemed pretty happy with it, it was not really what it seemed if you drilled down into the detail.
Correct, Alishia. On the surface, we get a lot of misleading headlines, I think, from the budget. There was talk of austerity, there was talk of taxpayers getting money back. None of these, I think, are true at all. We've seen another big deficit this year. We score the budget quite poorly. It's the same relatively unsustainable path that we've been on for a number of years now. There's no real sense of a credible plan that's believable as to how we're going to rein in this deficit. On balance, I'm pretty disappointed.
You say you score it badly. On a scale of 1 to 10, how do you score it?
We gave it a 4.
4 out of 10. In your books, Eugene, do you share that view?
Alishia, I think we probably come from a different angle to Russell. He looks at it more from an economic perspective. I look at it more from a tax perspective. Yeah. I think there were good points in the budget. There were also some bad ones, for lack of a better term. I think Russell is right. The leading sentence is usually tax relief to taxpayers. But if you really drill down, you have to adjust those tax brackets every year. Otherwise, people will just go backwards. And if you really drill down into that, the relief isn't as much as it might appear on the face of it. So I think, there are good things that I think are aimed at stimulating savings and investment into South Africa. But I think there's also a few aspects that you don't see at first glance, that if you really dig into it and you understand what it's about, you see there's also some bad that came with the good.
And that's key, because we had South Africans at large sign that breath of relief at 7 billion rand tax relief being afforded, and perhaps saying that, well, at least it's not the hikes that many were anticipating. But let's drill down into the detail and look at how this actually impacts the South African community at large, or citizens at large.
Well, I think, taxpayers get the same relief every year to adjust for inflation, but inflation isn't what they adjust the tax brackets for. Real inflation on the ground is a lot higher. So you've got that tax relief, you've got a savings element to encourage savings, bigger tax deductions for savings, so that's good. South Africa's got a very low savings culture, and people don't really have money to retire on, so that's very good. And I think to stimulate the economy, there are some measures. We've seen the employment subsidy come through. That's very good, to encourage people to employ young people coming out of school, trying to attract investment into South Africa, into special economic zones. That's a good idea. At the end of the day, though, I think that even though you have all those big or good ideas, the application of the funds is really the main issue, and I think that's where we're all coming short in the end.
Of course, a lot that was mentioned, is in a bid to address the kind of social imbalances we face in the South African economy at large, Russell. So what did you make of that, especially where the criticism has been, it's one thing saying it and voicing it, that rhetoric coming through, another thing seeing effective implementation of those plans?
Yeah, so there's clearly a very direct aim at addressing these imbalances through social welfare payments and so on. At the end of the day, we've got a very small tax base in this country supporting huge amounts of people. It's not sustainable. It's not sustainable in the long run. There has to be real capital accumulation in this economy. That's where the so-called infrastructure spending plan comes in. I don't see a lot of credibility in it, unfortunately. We're committing a lot of funds, in a line item on a budget, but when you get onto the ground, how they're implementing those big spending plans is very inefficient, often misallocating capital, and we're seeing strongly rising costs of capital. Inflation of capital goods has been significant. So 800 billion rand over the next 3 years doesn't buy you what it used to 3 years ago, and I think that's an important point as well, that the government is actually running out of space to a large extent to implement this plan.
With that being the case, there was a huge focus placed on compliance, and within that ambit fell the kind of tax avoidance policies initiated associated with trusts. While it was included in that ambit, many at this stage of the game, after deeper analysis, actually viewing those rulings as effectively a wealth tax.
Yeah, Alishia, I think we've generally seen that being the flavour of the month. Every budget, people can expect that the government is going to crack down on non-compliance. SARS is very efficient in terms of collecting the money. Obviously, we just discussed applying that money. That needs to be teamed up with the collection efficiencies, but there's a lot of loopholes that they're trying to cover every year. Specifically corporate financing type structures, those have received again attention. Share schemes, those have received attention, and now one that's come up, which they've indicated in 2011 the budget already will be an area of focus, is trusts. Trusts are used by, call it the wealthy, to do all sorts of tax planning, asset protection, estate planning. So it's quite a useful tool. Yes, you can get certain tax breaks, but our tax laws cater for those tax breaks. So it's not a case of tax evasion, it's a case of tax avoidance, which is a generally international principle that you can do as long as you plan your affairs in terms of the confines of the law. That's fine. And I think what they've now tried to do or suggested doing, because at this stage it's just proposals, is to tax trusts in a sense very harshly. And I think, sort of under the guise of trying to curb tax avoidance. But if you really look at it, trusts aren't just used for tax planning. There's a whole host of issues that you would use a trust for. And therefore, I think to just paint everybody with the same brush is going to be quite problematic. We'd have to wait and see exactly how it comes through. But if you read between the lines, and unfortunately it is a little bit clear, to tax capital gains as revenue when it's distributed to beneficiaries just doesn't make sense. That's very harsh and unfair. Okay, tax is not a fair thing. We can't debate that now, but it's just not the right way to do it. I think you're going to scare away people that have accumulated wealth, that Russell say are the guys who need to employ money back into the country to get the economy growing, to fund government collections on corporate taxes that have been stagnant for quite a few years.
Your view on this, Russell, because one can see the good in it, in that we've got a Treasury trying to enhance compliance and to decrease tax avoidance overall, but then you've got the negatives that arise as well, and the kind of impact it could have in terms of what's invested back into the economy down the line.
Yeah, I mean, I don't like it one bit, to be honest. I think we've got a fiscal setup now that's desperate for revenue, but they're not really making any serious attempts at cutting, the obvious problem, which is spending. We've got a major spending problem. My favorite economist, von Mises, said capitalism breathes through loopholes. And right now they're really clamping down on these loopholes. There's through the way they've adjusted the tax brackets and through the loopholes, I think in effect we're actually paying more tax in the coming fiscal year in real terms than we have been in previous years. So they're actually tightening the noose. And I just don't think the tax increases are the way to go. It's not the way to create a dynamic economy, in my view.
Does it breed any confidence in your books, the fact that we've had Finance Minister allude to the fact that they will be clamping down on projects that don't, hit certain targets by set date, the fact that they will be looking at the way money is spent within the various departments with more scrutiny?
So he has said that it's encouraging talk, but it's talk, and he's said it a number of years in a row now, and we haven't seen the real results of it yet.
So proof in the pudding. We'll be waiting to see, of course, how this all unfolds. Gentlemen, thanks so much for having joined us at the desk this morning. Eugene du Plessis is Tax Director at PKF, and Russell Lamberti, Chief Strategist at ETM Analytics.